Okay, all right. So that's opinion coming in from across asset classes. Gary Schlossberg is joining us right now. He's global strategist at Fargo Investment Institute. Gary, great to have you with us here. Thanks very much. The market here is, I don't know if you've noticed, but very strong outperformance, even as the US market has given up some 60% of its pullback rally from the lows in June. What do you think is going on? And, do you think it can continue? Your sense?
Well, I think the focus there has been on the domestic economy, which is holding up quite well. India is among one of the stronger emerging markets in that group, and I think it's feeding off some very good news at the moment. It will be tested, I think, going forward. We are expecting central banks in the U.S., the European Central Bank, to become more aggressive, the Federal Reserve maintaining that aggressiveness with 75 basis point hikes beginning this Thursday, we think, with the European Central Bank. So higher interest rates, I think, will create something of a headwind or at least a test for the Indian market. And then on top of that, we're just entering a global slowdown led by Europe, to some extent the United States. China trying to jumpstart its economy. We think that will be only partially successful later rather than sooner. These will be the two key tests, I think, for the Indian market between now and the end of the year. We're just entering that stage, and the true test lies ahead.
Gary, hi, good morning. But what about the mother market, the U.S. market? Do you get a sense that perhaps the yearly lows will be retested, or has the market made the low for the year?
Difficult to say whether or not the market will test new lows. Quite possible. What we do think, and what we've been thinking all along, is that the more challenging macro environment is still ahead of us. As I said, the Federal Reserve continuing to raise interest rates aggressively for at least one more meeting. And we do look for the U.S. to enter a recession by the end of the year. And of course, that against the global backdrop that is less than promising as well. So here, for sure, we think it will be a more challenging environment. Whether or not it hits those earlier lows, pierces them, remains to be seen.
In this challenging environment, Gary, India has been a bright spark, right? It's up almost 2% this year, while the S&P 500 is down 18%. Do you think this outperformance is something that can continue?
Well, as I said, I think the Indian economy is doing quite well. We share the view that growth in the coming fiscal year, or in the fiscal year ending in 2023, could see growth on the order of 7 to 7.5%. That's quite high by global standards these days. So clearly that is a tailwind for the Indian economy. The challenges are rising interest rates abroad, and a global slowdown that could create a real headwind for Indian exports, which have held up quite well. So that's really the challenge, the balance between those three, the positives versus the negatives, will tell the tale by the end of the year.
Gary, on Friday, we get, actually on Thursday, there is the ECB meeting.
Yes.
Now, many expect 75 basis point in terms of increase. Will that impact sentiment, or you think it's adequately priced in? And second, on Friday, I think we got EU energy ministers who will meet, right? All kinds of talk, what will happen. Some even saying that maybe there's nationalization of the energy sector on the cards. But definitely some drastic measures perhaps will be taken. Your thoughts on that?
Well, sort of a cross currents, I think. The European Central Bank set to raise interest rates by, I think, as much as 75 basis points. And as you mentioned earlier, that is becoming conventional wisdom. They're certainly leaning in that direction. Unlike the U.S., where inflation has peaked, we have seen continued increases in Europe. On the other hand, fiscal policy becoming a good deal more stimulative as they try to cushion the impact of higher energy costs. So cross currents out there, but once again, we do see the European economy going through a fairly severe recession late this year, extending through mid-2023.
Okay. What does all of this mean overall for risky assets? You did mention that, of course, asset classes like the Indian equities will outperform developed markets. But in general, as these rate hikes play out in its entirety, do you see risky assets like equities take a backseat? Or do you think that despite all the challenges, this will be, the investment tool for the next 1 year?
Well, we do see equities holding up better than bonds for now, while interest rates are moving higher. However, at some point, we do see the market breaking, reflecting the weakness that we expect to see in the U.S. and European economies. So by the end of the year, we would expect to see some weakness in the equity markets. However, keep in mind the market does tend to discount equity markets here and overseas. And as we move into 2023, if our forecast is correct of a recovery during the latter part of 2023 here and to some extent in Europe, the market will begin to reflect that as well. In the interim, we continue to focus on the higher quality, the larger cap stocks, strong balance sheets, and the more defensive, less economically sensitive sectors of the market.
Okay. All right, Gary, we'll leave it at that. Thanks a lot for joining in and giving us your view. That's the global strategist at Wells Fargo Investment with his view on the situation. They say that there is a more challenging environment that is lined up in the U.S. markets, but India is one of the stronger markets. Let's slip into a quick break. Our list of top 10 stocks is lined up in just minutes from now. Stay tuned.